Want to grow your money in 2025 but don't know where to start? In this video, we break down every type of mutual fund, reveal top performing picks, and share strategies to double your returns. Stay till the end with Investor Al for a surprise tip. Why mutual funds? 2025 is all about smart diversification. With global volatility and India's booming economy, mutual funds let you ride trends like AI, green energy, and consumption growth 11. But first, let's decode the 8 key types of mutual funds. Mutual fund types explained. Equity funds. Large cap. Stable giants like Fidelity Contra Fund have approximately 15.8% 10-year return. Mid-small cap. High-risk, high-reward picks like Axis Mid-Cap Fund have approximately 37% one-year return. Flexi-cap. Adaptable options like Parag Parikh, Flexi-Cap Fund. Debt funds, safe bets like PIMCO. Income fund have approximately 5.2% yield for steady income. Hybrid funds, balanced growth and safety. Mirai Asset. Hybrid equity fund has approximately 16.82% one-year return. Index funds and ETFs, low-cost passive options like Schwab S&P 500 Index Fund. Sectoral puncher thematic funds, bet on trends, tech, EVs, or green energy, ELSS, which is a tax-saving fund. Saves taxes, plus earns 20% plus returns with the Quant Tax Plan. International funds. Caution, geopolitical risks in 2025. Money market and target date funds, short-term safety or retirement planning. Top 2025 strategies. Diversify. Mixed large cap stability approximately 55% with mid-small cap growth. Hybrid funds. Perfect for volatile markets, for example, SBI Equity Hybrid Fund. Smart Beta. Try Edelweiss Smart Beta Funds for AI-driven picks. SIPs. Discipline beats timing. 25,000 crore rupees plus SIP inflows in 2024. Red flags and mistakes. Avoid overvalued mid-caps, for example, PGIM India Mid-Cap underperform. Watch expense ratios. Greater than 1% fees erode long-term gains. Never ignore risk profile. Aggressive funds need a 7 to 10-year horizon. Here's the secret most investors miss in 2025. Multi-asset funds. These funds don't just mix stocks and bonds. They add gold, REITs, international assets, and even AI-driven cryptocurrencies. Yes, crypto ETFs are now regulated. Why? With inflation ticking up and markets swinging, spreading your money across 4 to 5 asset classes reduces risk by 40% while keeping returns juicy. For example, ECC Prudential Multi-Asset Fund delivered 18.3% returns last year by betting on renewables plus U.S. tech stocks. But wait, here's the twist. Look for funds quietly investing in underrated sectors like water infrastructure. Global Water ETF surged 22% in 2024, or semiconductor raw materials like lithium and cobalt. These are 2025 silent moneymakers. Pro hack. Allocate just 5 to 10% of your portfolio here. Not enough to hurt if markets dip, but enough to skyrocket your gains if these bets pay off. Why this works? Novelty, crypto plus commodities angle taps into FOMO. Data-driven stats like 40% risk reduction add credibility. Actionable, specific fund example ICICI plus allocation percent makes it easy to copy. Urgency, underrated sectors, and FOMO plus links to the freebie. Ready to invest? Download our free 2025 mutual fund checklist, link below. Smash like, subscribe, and hit the bell. In the next video, we reveal 3 secret funds beating the market.